Let's take a look around this weekend's auction results from around the country. Nationally, there are almost 1,400 auctions, so it's a pretty strong weekend despite bad weather across the eastern states. In Sydney, 379 auctions, 92% of those were sold, and a further 1,537 private sales across the state. So that's pretty strong. In Melbourne, 620 auctions with the clearance rate there just under 82%, and 1,341 private sales across Victoria. In Brisbane, there were just 44 auctions, no surprise with the wet weather. 68% of those homes were sold, and 1,380 private sales across Queensland for the week. To Adelaide, 62 auctions, the clearance rate there strong, 93%, 367 private sales. In Canberra, 75 auctions, a clearance rate of 81% plus on top, 78 private sales. And finally, in Perth, just one auction, it sold, but 746 private sales as well. Joining me now is Angus, the Economist with REA Group. Angus, can I just ask you, with housing markets right now, is it getting to the point where there are enough sellers of properties to match the number of buyers who want to buy, to the point at which these price rises we've seen over the past 12 months just start to cool off a bit?
We're certainly starting to see a lot more properties come to market, which will come as real relief for buyers who, for much of last year, were facing pretty few options to choose from and very stiff competition. But we're seeing auction clearance rates remain quite high, measures of buyer demand on realestate.com.au remaining really strong. So we don't think we've tipped from a seller's market to a buyer's market just yet, but certainly we will start to see some slowing in price growth.
Okay, but that also implies that the banks quite clearly have an appetite for more mortgage lending, that they don't see any real sort of handbrake, if you like, to the price rises we've already seen, even to, if you like, the stretched affordability that clearly now the buyers have to go through.
Yeah, I mean, there's quite a lot there. We're seeing affordability remain pretty good at the moment. Banks have to assess people's ability to pay the loan at an interest rate well above the prevailing interest rate. So, on measures of affordability in terms of mortgage repayments to income or, mortgage repayments indexed to inflation, we're still seeing that most borrowers, and, not all certainly, but most borrowers are able to afford their mortgage, and mortgage serviceability remains much better than it was in, 2008 when interest rates were much, much higher than they are today.
And there's a little irony here, isn't there, given the state of the global economy right now? We've talked about that earlier in the program. There is a situation where, with oil prices rising, there is also the fear that if there's any economic slowdown as a result of what's taking place in Ukraine, that means the Reserve Bank will not be raising any interest rates anytime soon. I know the Commonwealth Bank is still saying, no, we think it's on track. It's going to be sort of in June to August this year. But there is still the risk out there right now that if the world economy turns south, that the Reserve Bank has got no choice but to keep interest rates exactly where they are.
You're absolutely right. I think the risks have certainly changed in the last month or last week, even around interest rates. I think we weren't expecting interest rates to rise until late this year or early next year, as it was. I think there's a lot of unknowns. Ukraine is clearly a big one, but winter is one as well. As much as we are hoping that we're out this pandemic, we've still got winter to come, and it could be a tough winter. So I would be surprised if the Reserve Bank was in a rush to raise interest rates with all that uncertainty around.
Yeah, it's going to be fascinating. And so, interestingly, from your point of view, REA Group's point of view, when do you imagine the first rate rise will come from the Reserve Bank?
Yeah, it's a great question. It's the one that I think we get asked most. Our view is that the RBA is looking to be patient. They've said that repeatedly. Governor Lowe said he wants to see wages growing at something like 3% for him to be convinced that inflation is sustainably within the RBA's target of 2 to 3%. We had wages growth data out last week showing that wages grew 2.3% over last year, which is basically bang in line with what the RBA was expecting. Wages tend to pick up pretty slowly. Wages are renegotiated every year, or in the case of EBAs, every few years. So we don't think wages growth is going to jump to 3% until at least later this year, even with the labour market as hot as it is. So we think it's probably late this year or early next year that the RBA will be looking to raise rates.
Angus Moore from REA Group, many thanks for your time on the program today.